Hello traders, welcome to Wesley Forex Academy. This is a new YouTube channel actually with the aim of educating a lot of traders who are still finding it difficult in the Forex market and still blowing up their accounts. So this YouTube channel is going to help you to grow your accounts, teach you what you need to know to trade and be consistently profitable in the market. Okay, today I have a strategy that you can use to scalp the boom and crash market. This strategy works best on boom 1000 and crash 1000. It doesn't mean that the strategy doesn't work on crash 500 and boom 500. The strategy also works perfectly on them, but I myself enjoy using it on the boom 1000 and crash 1000 pairs. Alright, so straight to the setup for this strategy. But before that, please ensure you subscribe to this YouTube channel if you haven't. And if you like this video, please share it to your family and friends. Turn on the notification bell so that when next we upload a tutorial or strategy video, you also get notified and you get to watch it. So straight to the settings for the indicator. As you can see, we're going to be using just 3 EMEs on the main chart, just these 3 EMEs on the main chart. The first moving average is period 9 shift 0 method exponential applied to open, then style pixel and color of your choice. Anyhow I want to do it, then you click done. Then the next indicator is our moving average period 200 shift 0 or method is exponential applied to open, the pixel and color of your choice. You click done. Then the third moving average is period 50 shift 0 method exponential applied to open, then the pixel and color of your choice. Alright, so on my chart here, the red moving average is my 200 EMA, the blue moving average is my 50 EMA, then the green moving average is my 9 EMA. Before I go on to the conditions for buys and sell using this strategy, let me explain what the 200 EMA is. The 200 moving average serves as a dynamic support and resistance in the market. A lot of traders, even those that trade currencies, volatilities, gold, Nasdaq, whatsoever, they make use of the 200 EMA because it is very important. It acts as a dynamic support and resistance. For example, now the market respects the 200 EMA. That is what I mean to say. Actually, most times the market rejects when it gets to the 200 EMA, and the 200 EMA somehow like shares the market. It tells you where the bulls are in control and where the bears are in control. If the market is below the 200 EMA around here, it shows that for this moment the bears are in control of the market. So when the market is below the 200 EMA, you look for more sells, and when the market is above the 200 EMA like this, you look for more buys. And you can see that when the market is above, it's spiking real hard, but when the market is below here, we didn't have a lot of spikes. But immediately the market spiked and went up above the 200 EMA, you can see the series of spikes that we have here. Alright, so conditions for a sell on boom pairs, that is boom 1000 and boom 500. We're going to be looking for crossovers, for moving averages crossovers on our 9 exponential moving average and our 50 exponential moving average. This strategy does not really have a specific zoom level, but if you want to use zoom level 1 or 2 or 3, anyhow you want it, it's still good. But I think zoom level 3 will give you the perfect view for the market. Alright, so conditions for a sell using this strategy. First of all, you should always make sure that the market is below the 200 level anytime you want to sell boom 1000 and boom 500. You can also use this strategy to catch spikes, but I'm also going to teach you that, but that will be later. Let me finish with the sells first. Before you sell boom 1000 and boom 500, make sure the market is below the 200 EMA, just like this, and then we look for crossovers of the 50 EMA and the 9 EMA. Make sure that the 50 EMA crosses over the 9 EMA. Then you enter on the cross, like when the market is crossing over, you enter. Let me use my arrow to show you, like this crossover over here. Whenever you see it, as the market is crossing over, you enter and sell for 7 to 10 candles. Take 7 to 10. You can try to take 7 candles, 8, 9, or 10. 10 is the maximum for this strategy. Take 10 candles, 7 to 10 candles, any of your choice. So okay, look at this crossover here. Now we'll have entered the market here after the crossover, and then you see we had a lot of candles, but don't be greedy. Do not be greedy. So take just 10. So our take profit will be somewhere here. This is 10 candles. 10 candles. So we'll have closed the market on this second horizontal line, taking our 10 candles. Let's look for another opportunity. You see, we are not going to enter here. We are not entering here because the market is above this 200 EMA. So be very conscious of that. Do not enter the market even if there is a crossover. Do not enter if the market is above the 200 EMA. So you see here, we wouldn't have entered this market because the market is still above the 200 EMA. But here the market is below the 200 EMA. You see the EMA is above the market. So we enter for 10 candles here. This is it. Well, I entered here, and then we'll have taken our 10 candles and out of the market we go. You see, more than 10 candles came, but we're taking just 10. Let's look for another opportunity. All right, looking at this now, the market is below the 200 EMA. You see it, the market is below the 200 EMA. So entering on this crossover, I will have taken our sweet 10 minutes candle. We'll have entered here, and our take profit will have been somewhere here. I think 10 candles. You can decide to take 7 and leave. You can decide to take 8, decide to take 9, you can decide to take 10. Any amount you really want to take. Look at this already. 10. I remember I milked this market very well. That is why the arrow is already here. So you take 10 candles. And then you go out of the market. You can see you take 10 candles. Our entry will have been somewhere here, and then these 10 candles will be all ours. Take 10 candles. Do not take more than 10. If you take more than 10, you're not using this strategy. Just take 10 at most. Take 10, and at least you can take 7. And you can see a lot of opportunities. We wouldn't have entered here because the market is still above the 200 EMA. All these entries, all these crossover here are invalid for sale. Even if it sold more than 10 minutes, they are invalid. We need all our conditions to be met. And what are the conditions? You make sure that the market is below the 200 EMA. You make sure it is below the 200 EMA, and then we have a crossover. Then we stay in the market for 7 to 10 candles. All right, let's check crash 1000. Crash 1000. So now for crash 1000, we make sure that the market is above the 200 EMA. Make sure the market is above the 200 EMA, and then there is a crossover. Then you go in for a buy. Look at this crossover now over here. You see it? The market crossed over, and then we are in for a buy. Look how the market went up, but we are taking just 10 candles. Do not forget, just 10 candles. You know, if you can take 10 candles on every trade, you did this 10 times a day, it is enough. You can make $100 using this strategy. You can make 200, 300. All depends on you, your account size, and the lot size you use. Assuming you use one lot to trade this strategy, the 1000 pairs will give you 0.50 per candle. So 0.50 times 10 candles, that should be $5 if not mistaken. So on one trade you make $5. That is just one position, you make $5. So if you open 10 to, or maybe let's say 5 to 10 positions, you know how much you're going to be making. All right, you can see all these entries here are invalid. You see the market now is below this 200 EMA, and then you can see the crashes. But once the market crossed our 200 EMA and went up, you can see it started buying. You can see the massive uptrend. You can see it, but immediately it crashed down. Then you enter for a sell if you want to trade spikes. If the market is below the 200 EMA and then you see crossovers, you can also trade some spikes there. See crossovers, you can also trade some spikes. Alright, let's look for another opportunity to go on a buy. Alright, you see here now the market is above the 200 EMA. You can see the market is above the 200 EMA, and then we have a crossover. You have a crossover here. See it? That is the crossover. Then we go in for 10 candles. So our entry will have been somewhere here, and then we go in with our 10 candles. Just 10 candles, and then you leave the market. So as you can see, this strategy works perfectly. It works perfectly on the boom 1000 and crash 1000 pairs. You can see lots of entries. You can see this here. You can see another here. This is not a perfect crossover, so we do not enter. You can see another here. This is another opportunity, and then another one down here. You can see, just imagine, this strategy is 90% perfect. Crossovers, just look for crossovers when the market is above the 200 EMA. You can see another here. The market went up for 10 candles, for 10 perfect candles. Look at this over here also. This is also under 10 candles. You can go down. You're gonna see a lot of opportunities. This is another opportunity over here. You can see one here also. Alright guys, so that's how the strategy works. Very simple and profitable. You don't need to fill up your chart with lots of indicators to make the market. No, just use the strategy and you're going to make the market successfully. If you need to ask me any question whatsoever, my contact details will be in the description box below. And also do not forget to subscribe to this YouTube channel to enjoy lots and lots of trading tutorials for free, and also strategy videos. Thank you. Remain blessed. Wesley signing out.